Hello everyone, this is Marvin from StockMarketPlan.com with your stock market watch for August 17th, Tuesday session. And looking right now in front of you at the S&P 500 through the SPYs, symbol SPY. We have a bounce, okay? 1, 2, 3, 4, 5. The last 6 sessions we've had a bounce. What is obvious? What is obvious to me and should be to you is on the bounce. What is the obvious thing? I ask you, what is it? Well, it's volume, isn't it? Volume decreasing on the bounce. Guys, I've been calling this from way back here in February. We had the same exact type action that led to this debacle right here. I mean, if we look right here at major sell-off right here, bounce, low volume, okay? Then more low volume, and then selling intensifies volume. Okay, and it just trickles down. Then more volume here on the down days again. Okay, and then we bounce sharply on this cast here. Back on this, a couple of days here, back in June 24th or 27th. That was a Monday, I believe. I did have cast one of these couple of days, and I mentioned about the market bouncing. That the worst thing it could do was the market bounce, like wedge up. This is called wedging. Wedge up on the chart. Okay. And do it on light trade. Well, what did it lead to? It led to some sideways action, and then finally the big breakdown came that the market really has told us, really it's told me from way back here in February, okay, that since I've been doing this, cast, since I've been doing coverage here on YouTube way back here in February, and you can look back at my videos. It's all there. It's all documented. And you can go back, and I mentioned that it was troublesome. Volume patterns stink in the market. They are awful. This is the stuff that I've learned to look out for. Okay, this is the big money crowd. They're the ones that are going to move markets. Well, if they're the ones that are going to move markets, where are they in this bounce? Where are they? Okay, where are they in this bounce? Okay, right now we're doing the exact same thing. We're wedging this market up. What would I have liked to have seen is this market basically trade sideways. If you look at the chart here, just come over and just consolidate sideways and then get a good breakout day, a good follow-through day that leads to higher ground. But before the market does that, it has to come down. The market has way too much volatility in an intraday. I mean, especially in the couple of first days on the 10th and 9th, okay, of August, we were having these wild swings intraday, 400 points. I mean, we haven't seen volatility like that in a long, long time. The market has to calm down to have meaningful, to have a meaningful and constructive chance of finding higher ground. Okay, the market is not going to do it like this. It can wedge up here all you want. That's like throwing a dice on a table. Okay. I've been in cash from way back here, okay? Saved a lot of money, okay? These people that are just buying bottoms down here, okay? They're just barely breaking halfway even now. Just barely breaking halfway even. I mean, this is the whole move right here. I mean, even with these days that we've had on low trade, okay? It's worrisome. Again, the same pattern exists, okay? The more this happens, the more we wedge up, the more I feel we'll have lower lows. I really do believe so. I mean, if this wedging up on low trade keeps happening, I think we're going to have another leg down. We're just going to have to wait and see. You know how much I don't like to predict things. I just interpret them and give me the best chance of, through that interpretation, figuring this thing out and figuring out, where the most risk is. So it's so obvious. I mean, it was somewhat obvious back here. Again, I encourage you, look at my previous videos. I talk about this stuff, okay? I've been talking about this stuff for months, like 6 months now, half a year. I've been talking about the markets don't look right. And guys, it's not that I'm bearish on the market. It's just that it is what it is, okay? The one thing I do teach people when they come to me and they say, what do you like to see is, you guys got to be the market. You can't be a bull. You can't be a bear. You just have to be the market. Whatever the market's giving you, that's what you have to believe, because that's what it's going to give you. And it's trending sideways. and now it's collapsed, and now we've got low volume bounce day. Okay, if you want to learn a little bit more about the stuff that I cover here, just go back, watch the videos, okay, and you can see everything. It's documented on YouTube, but you don't have to take my word for it. I mean, be careful. I'm already starting to hear. I watch CNBC and other shows. I've got nothing against CNBC. What I have something against is the experts that get on CNBC, on Bloomberg, and all these different networks, Fox News Channel. Everybody's, they have all these guys on. That's pretty much mostly the same guys. And there's a lot of guys out there, and gals, women too, that are picking bottoms on this market already from way down here. Oh, this is the bottom. Okay, this market has to show more cards out of the deck. This market has not by any means bottomed yet. There hasn't been a follow-through day. If it's truly a bull market, you have to have that follow-through day. Okay, if you don't, it might last, but it probably won't last as much as a true bull. Okay, most of the activity is on the downward. When we're heading downward, the people are selling with two hands. Okay, when we're going up, they're not. Okay, they're just lightly biting, buying stocks here and there. This is a trader's market. I mean, traders love this. When they have 400-point swings, intraday traders, I mean, that's just a beautiful thing. They can go in there and they go in and out and stuff. That's a whole nother ball of wax. I'm talking about your retirement funds. I'm talking about your IRAs, your 401ks. How are they invested right now? Are they all in stock? Okay, right now my stuff is all in cash. It's been from way back here, and I've saved a ton of money, about 15-20%. Okay, so is it lucky? Is it that I have a crystal ball? No, it's about interpreting markets day in and day. They give you the clues. The markets will give you clues. Okay, and again, go back in the videos, look at the videos, and you'll see the pattern as I go day by day. From you can probably start around April and just look at all the videos. They're very short in time, and it's all there. How I pretty much call this bear market without having to predict anything, just by watching everything and slowly weaning off of position, weaning off of equities, and basically being all in cash when we got right around here. Okay, and then I saw it go up, but the bounce was light. Okay, I was like, big deal, it's going up. Okay, and it hit resistance, and boom, it came straight down and crashed. Okay, so do this so you guys can see how I do it. I don't have a crystal ball. I'm not better than the next guy. I just have a passion for interpreting markets, what hand they give you. You're not going to hear me come in here and say, oh, the Dow's going to be at 14,000, or the Dow's going to be at 12,000, or 9,000, or whatever. That's worthless. Okay, most of us don't even know what we're going to have for lunch today, let alone where the Dow's going to be 5-7 months from now. I'll leave that to the guys on Bloomberg and on CNBC to do that. So market hasn't shown anything to me that it wants to bounce meaningfully. Okay, in other words, a true bounce with gusto. Okay, first this thing has to base out. It's just too wedgy. Here we go again. It's doing the same thing all over again that it did back here. I mean, it's identical. Boom. Okay, straight up. I drew these trend lines so you can see what I mean, and I drew this so you can see right here what volume I'm talking about. Okay, wedge up, light trade. Okay, we come straight down heavy. Trade intensifies, right? It's right there, all in front of us. I didn't make this up. This is the market, okay? And then we start wedging up again. As a matter of fact, we've extended big time from the line, okay, from the trend line, and again, volume down. Just things to look at, okay? Are they foolproof? No, okay? But nothing really is. We just try to stack up the cards one way or another, and right now they're stacked up bearish. Does it mean the market doesn't go up 300 points tomorrow? No. Does it mean it goes down 400 points? No. I'll let the market trade. I do it every day. Just watch it and then make investment decisions as we go. I tell you what, all I'm waiting for right now is this market to trade sideways a little bit, okay? And then if it does have a follow-through day, okay, what is a follow-through day? A day where the market closes up at least 2 to 3% really after this action on heavy trade. I like to see it twice or 3 times the average volume, like this. That's heavy trade. Okay, do I see that here? No. Okay, so that's what I need to see, and then I'll start stepping into equities again, 25%, 50%, until I'm fully invested again. and then I'll just keep doing that over and over again. That's the way I missed the technology bubble, most of it. That's the way I missed most of the real estate bubble. Okay, so I mean, I'd rather be down 5-10% than 40, 50, or 60% in one of those bare legs. Okay, everybody's gonna make money when the market's going up. It's very hard not to make money when the market's going up. What it is hard to do is saving money when the market is tanking the way it has in the last 2 to 3 weeks. So as you can see, I mean, we've had 5-6 straight sessions, and we've only made half the ground up from the top here when we broke down the 200. So I encourage you to look at the previous videos, post questions, concerns. If you disagree, let's get into a discussion about it. This is the way you learn markets. Okay, I don't want to drag it out anymore. Again, this is Marvin from stockmarketplan.com. Come to the website, subscribe to the feed. The days that I post something on the website, you will get an automatic email where you can link into and look at the content. Okay, guys, thanks for watching. Bye-bye.